In this video, I'm going to talk about what's going to cause the Austin housing market to crash. Hey, I'm Eric Peterson, broker and owner of Kopa Real Estate right here in Austin, Texas. Everybody's coming up to me saying, oh my gosh, the housing market's going to crash. It's going to crash. It's going to pop. And when I ask them why they say that, they can't really give me a concrete answer. It's just something like, well, it has to. It's too high. My friends told me that. Here's what I'm going to do. In this video, I'm going to give you a few of the reasons why the Austin housing market would crash. The first reason why the housing market would crash is because interest rates will be going up. Now, we don't know what percentage of buyers are jumping into the market simply because interest rates have been historically low, but we do know it's a big motivating factor for why buyers are willing to make offers on homes and in particular bid up their prices because they're looking at borrowing in the mid 2% and it's not costing them that much money to pay an extra $10,000 or $20,000 on the average house. Well, here's why interest rates will be going up. It's almost impossible to imagine that we're not going to see inflation once we're past the pandemic. With all of the money the Federal Reserve has been pumping into the economy, it's hard to believe that isn't going to cause inflation. And here's how that affects mortgage interest rates. Typically what we see is mortgage interest rates will be going up when there's more inflation. And so as inflation happens, we will see interest rates increasing as well. If you want to track what's happening with the mortgage market, the best rule of thumb is to watch the 10-year Treasury yield. Mortgage rates typically will track along with that 10-year yield. And we've already seen, I'm shooting this on February 2nd, we've already seen the 10-year go up from about 0.8% up to about 1.1%. And some expectations that we're seeing for this year is that the 10-year will go up to 1.4 or 1.5%. Here's why that's significant. That would give you mortgage interest rates 30-year fixed above 3%. And that may seem like, oh, who cares? 3%, my first mortgage was at 8%, 3% is great. Well, there's a whole group of buyers that are out there right now, and often the ones that are paying the highest prices for the house who've never seen mortgage rates below 3%. Psychologically, what is that going to do? Well, it's going to add a little bit to their payment, but really it's just going to cause them to stop and maybe pause on making that purchase, maybe pause on bidding another 10 or 20% above asking price for the house. We'll have to see exactly when that happens, but we're certainly at some point in the future going to see interest rates going up. The second cause of an Austin housing market crash would be the stock market crash. If you look at the housing market, and certainly that's gone up, almost nothing compared to the stock market and everything that we've got going on with Tesla and GameStop and all kinds of frothiness in the stock market right now. Boy, it's easy to see that we could see a 10, 20, 30% pullback in the stock market. And we know last March in 2020, when the pandemic really took a hold of everything and made things shut down, we saw a crash in the stock market, and that caused the housing market to essentially stop. We had houses where we had 3 offers on the home, and all 3 of those buyers pulled out their offer. We had buyers calling me to cancel contracts almost every day. And that was simply because the stock market was dropping. So we've got a lot of people that are buying houses and paying higher prices because they think prices are going to go up. And many of those buyers also, though, are very risk averse. And if they start seeing the stock market go down, that might cause them to get scared off and not make offers on houses. The other thing with the stock market is that a lot of these buyers are coming here with good tech jobs where they get stock options and they get stock from their company. And so they're using that stock in order to purchase a home with their down payment or cover the shortage of what a home would appraise for in the sales price. So they can come up with an extra $100,000 in cash to buy that home. So what happens if the market crashes, if it goes down 30% and those tech stocks aren't worth as much and they can't cash them in? Well, that's going to cause there to be a lot fewer buyers that are willing to pay the higher prices that we have right now. The next reason that the Austin housing market would crash is if we see a higher inventory of homes for sale. You know, the Economics 101 is simply supply and demand. So we've got a lot of buyers and not enough homes to sell. Well, what's going to happen when homes do come on the market? So what my expectation is that as sellers see these inflated prices that are going to be reported in February and March, I anticipate we're going to be getting a lot more phone calls from people who are ready to get their homes on the market. One of the reasons why buyers are willing to pay a higher price is because there's only maybe one house to choose from in the neighborhood. Well, what's going to happen if a buyer has 4 or 5 homes to choose from? All of a sudden, you're going to see buyers pull back a little bit on their offers because they're going to look at it and say, well, maybe I'll wait and get another house. Maybe that house isn't perfect. I'm not going to bid on it. And so we might not see those really high prices, particularly on the homes that aren't the super great houses, and that could cause really a decline in prices as more homes come on the market. I can tell you again, I'm shooting this on February 2nd, the number of homes that we're going to be selling this year is much higher at this point in the year than it was in 2020. So I do anticipate that we will see more homes on the market as we get further into the year. The next reason why we may see an Austin housing market crash would be job loss. So we always want to think here in Austin that we are insulated from any kind of national or worldwide economic decline. That's not really true. I mean, the economy is still national and international, and think about how many companies are here are international companies. And if those companies start to pull back a little bit on their hiring, or if all those people that are moving here from California because their companies have told them that they can work remotely decide that they really want to have those employees back in California at the office, what'll that do to our market if all of a sudden we don't have those people? And we've got to realize that we've got many people that are buying houses right now, and they're willing to pay prices for 2 and 3 years out currently because maybe they're moving here for their job, or maybe they're just anticipating there being a lot more jobs that are going to be here in the area in 2 or 3 years. So what will happen if that doesn't come to light? Well, then we'll see more homes that are coming on the market. We'll see less buyers that are willing to pay these prices, and that could cause a crash in the housing market. And finally, property taxes. So many homeowners are going to wake up to a tax assessment this spring that's just going to be sky high based on the recent sale prices that we've seen. And many of these people, I know certainly in our neighborhood, probably aren't going to be able to afford these price increases. And that may cause some of these sellers to have to sell their house if they can't afford the extra money that's coming, that they're going to be paying in property taxes. The other thing is that a lot of these buyers don't understand exactly how property taxes work. And they're buying a house based on property tax assessments from 2020, which is really based on sales from 2019. And they're looking at the amount of taxes that they're going to be paying and not realizing that the actual bill that they're going to get after they move in is going to be significantly higher than the 2020 taxes, particularly for any homes that were in Travis County, where Travis County froze the property tax assessments for any homestead properties last year. You are going to see much, much, much higher property tax assessments in 2021 and 2022. We're also going to see a lot of these investors who are buying properties based on the lower tax rates. It'll be interesting to see what happens if they can keep those properties when they really see what they're going to be paying. You know, I've looked at several people who have contacted me and they were talking about selling their house or renting their house, and they don't realize that at today's assessment, even if the prices didn't go up from today, based on what their homes are currently assessed at, once they convert those to a rental property and they lose their homestead exemption, they're probably going to be paying another $3,000 a year in property taxes. And most are not calculating that into their figure about whether they can keep the property or not. So whether it's this year or maybe in 2022 when they start seeing those assessments and bills come out, many more of those investors or absentee owners that we're talking about who just own that one property or moving up, I think you're going to see a lot of those people have to sell their property because they're just not going to be able to afford the loss that they're going to be paying every month compared to their mortgage payment, compared to what their rental payments that they're receiving. So what's my guess? Well, my guess is we're not going to see a crash, but we may certainly see a correction in the market based on all of this information and any one of these factors happening. It certainly doesn't take all of them to happen. So we're very careful right now. We are seeing a frenzy in the market that we're not telling our clients to hold off on selling till later in the year or next year, because we are seeing buyers today be willing to pay prices that are almost 2-3 years from now, that we don't know what's going to happen later on. And certainly somebody that needs to sell their house today, usually trying to time the market is a losing bet. You should absolutely contact us to see what your home would sell for in today's market, and then talk about your situation and whether you should really get your home on the market today, or whether maybe you really do need to wait and see what happens in the market. Whatever's best for you, we're willing to talk to you with no obligation, no pressure. We'll just help you make the best decision for your real estate needs. Whenever you're ready to talk, reach out to me directly at 512-791-7473 or eric@koparealestate.com. Thanks for watching. Take care.